Let's start with the ECB. The level of hawkishness that we got from the ECB. Were you surprised by the targets they gave us around inflation, or their assessments of the inflation challenge that lies ahead? Were you surprised by the way Christine Lagarde says anyone who interprets this as any kind of pivot is wrong? We still have a long way to go. We're still behind the Fed. All of this added up to quite a hawkish message.
Yeah, I can't say I was massively shocked. We've talked a lot about this week, and we kind of discussed this week that we expected ECB to be the hawkish central bank. So I was looking for a very hawkish message, but I'd say that even given that consideration that we were expecting ECB to be the hawkish one, they out-hawked even my expectations. So it was a little bit further than expected, not shockingly so. And certainly you saw that impact in markets, including, two-year yields across Europe, and bond yields really surged yesterday. We saw Euro stocks have its worst day since March. So generally, they did kind of deliver on market. And I think it's interesting that you said that line about Christine Lagarde pushing back in the idea that 50 basis points is a pivot. I find it hilarious that 10 months ago, there were so many in the markets who'd only looked at the last kind of 15, 20 years of central bank history who thought that anything more than 25 basis points hike from any central bank in developed market central bank was a shock. And now we seem to be talking about the idea that central bankers have to push back in the idea that cutting down to 50 basis points isn't a dovish pivot. I think it really shows how quickly the market's changed over the last 10 months.
The narrative has changed. The definition of jumbo move certainly has changed, and the definition of a sort of normal size move has definitely shifted. Mark, with that in mind, just linger on the European bond market story, because there we did see some expression of surprise at the level of hawkishness there. German bonds certainly at the short end. We saw the highest yield since 2008. Italian yields also on the move. This is maybe something that is sustained into next year, given that the inflation challenge that they outlined yesterday seems to be quite a lengthy one. It's not something that they think is going to be done and dusted next year.
Yeah, and this is a country that is an economic zone that is not denying the economic pressures in terms of growth. And I think this is the dynamic that we're going to see everywhere. And this is why I probably am a little bit more in the Fed's camp and pushing back in the market pricing a little bit in terms of where we are on the rates path, because I think that these central banks are delivering a message of going, we know growth is slowing down, we know it's going to be poor, but we've got an inflation problem and we need to control that. And I think if you look back to what we had in the 2002 era, we had this period where we went into recession, but the central bank, the Fed, kept rates high because they were worried about inflation. And I think that's what the ECB is saying. We're going to follow the same game plan now. We know we're going into recession. Eurozone might be in recession already, but we've got to focus on the inflation fight, and we're not close to containing inflation yet, and that's why rates have to stay higher for longer.
That's why rates have to stay higher for longer. That was the story yesterday in Europe, and certainly we saw some expression of that in European stocks, and then into US stocks as well. They had another day dealing with the Fed, or perhaps the message is just reinforced by the ECB. A quick word on industrial metals, looking pretty soggy. We've had some news flow surrounding China and the size of the buyer in China, which seems important.
Yeah, look, I think it goes back to this Goldman's call that, supposedly Goldman's saying it's the best sector for next year, and I think that seems logical. And one of their big arguments is, of course, the China reopening story, which we've really seen expressed in Greater China stocks in some asset prices. But commodities are not buying into this enthusiasm yet, and I just wonder whether the last couple of years of bull market commodities might have built up excess supply in some of these industrial metals. It was interesting recently that lithium even is rolling over, which is a metal that we just only heard about as massive excess demand. But even there, the supply is starting to come online and see a little bit of weakness.
OK, remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. MLIV Go is the function to use on your Bloomberg terminal.